Good morning, everybody. It's Wednesday, July 14th, 9:20 a.m. my time. We got prices of Bitcoin currently sitting at 32,600 and some change. I have got a fantastic video for y'all today because we are going to take a top-down look at the market of crypto, starting with Bitcoin, then we'll jump into Ethereum, then we'll jump into other altcoins and DeFi altcoins as well. Today, what I want to cover is my overall outlook on BTC. I'm sure you've been seeing a ton of people talk about their targets for Bitcoin prices up and down and when they believe the bear market is going to end and their exact date when the bull market is going to start. But we're not going to do that. Today, what we're going to do is we are going to look at the market from a purely objective view of what the market structure is saying, what the data is saying, what the surrounding news, momentum, sentiment is giving us a clue about the market. We'll also look at a couple of charts of exactly what has transpired through the market, what we should be expecting for the next few weeks, how to prepare for the next few weeks in the best way possible. And then we'll, of course, look at DeFi and Ethereum the same way and what kind of impact BTC is going to have on these markets as well. Then we'll look at the bullish outlook. When exactly do we expect this market to have the final capitulation move, if there is a move to come? We'll outline probabilities of which assets that we should be paying attention to, which assets we feel like are going to be the winners of the next bull market. Then I'll show you all exactly what our community has been doing for the last several months, what our plan is for the next few weeks, next few months, and how we've been prepared. I'll also show y'all our $5,000 account challenge, which we started at the beginning of the year on January 1st, 2021. We're currently in middle of July, so about 7 months in, and how that challenge has been doing. All this stuff I'm going to give to you guys for free today. So make sure you hit the thumbs up. If you are interested in joining our private Discord community, you can go to thealphatrades.com, hit the products page right here, and only for $97 per month, okay, $97 per month, you can join our Advantage membership and you can get access to our entire Discord community. We discuss everything in the market, whether it's DeFi related, altcoin related, or Bitcoin related, okay? All the information that you would need, multiple videos a day I put out for my Advantage members, and I let them know exactly how I'm seeing the market. So let's get started. First things first, what I like to do is look at exactly where we are in terms of the market. So as of the time of making this video, prices of Bitcoin currently sit at $32,700. So let's mark that out. 32,700. Where's ETH at? Currently around 1975. Okay. So we just do this just for referencing purposes. Okay. Now, what we're going to do is we're going to start off with Bitcoin, right? The biggest asset, biggest market cap, basically drives the momentum and cycles for the market. So what have we seen over the last few days, last few weeks? We know for the most part that after marking this distribution top right here, a head and shoulders pattern that we aggressively sold off from, many things happen in the last month or two that has given us this kind of grinding movement. First of all, we had the whole Elon FUD that happened on this day. China miners were being banned, and they still continue to be banned because if you look on my Twitter feed right here, even yesterday, you could see China's Anhui province bans crypto mining. This is like a weekly or bi-weekly occurrence coming from China. Now, whether you want to call it FUD or news or whatever, it doesn't matter. But the point is it's happening. And in a country like China, when something like that happens, it's really not the people that have the ability to defy the government. You guys know that very well. It's a very authoritarian government. You don't really go against the government. So when China says, hey, we're doing something, we're going to ban you, censor you, whatever, that shit is real. And it is very real for the crypto market because it has had a significant impact on the market. Because what's happened overall is from China, there's been a huge mining ban, and this is actually visible by the hash rate that has completely dropped off a cliff. Okay, completely dropped off a cliff. And I think that's somewhere on my Twitter feed here. You can probably do a quick Google search and find that out yourself, though. We've also had a trader exodus or flight of capital, meaning many traders from China, especially from the Huobi OKX exchanges, have started to move money off those exchanges or started to sell their position. And again, in my last video that I did, I had explained this to y'all, how exactly it was visible to be seen that Huobi and OKX was actually moving Bitcoin or assets from these exchanges either into Bitfinex, or during the Asian hours, what you were really seeing was a net selling effect going to the market, or rather even a lack of bidding or lack of buying. So all these things tell us, they give us clues of what's been happening over the last several months. And what's been abundantly clear is there's a lack of bid in the market from Asia or from China specifically. And there's a net seller in the market, which are Chinese traders. And of course, this whole China ban has created a pretty significant impact on Bitcoin. But I also am aware that even though there is a mining ban in China, some of that miner equipment, the mining facilities are rotating over to the West, say Europe or even America. So it's not the worst thing in the world for the long run, but for the short term, we have seen a significant impact on price, and we continue to see that on a day-to-day basis. Lack of volume and volatility, another conversation that has obviously pierced through the Twitter sphere, and everybody's discussing, oh, this move doesn't have that much volume, so maybe we do get, a move from here on up. That's not how volume works, and that's not how volatility works either. So here's something that will give you a better understanding of how volatility is working. Okay, so let's go to historic volatility right here. So this indicator down here is the historic volatility of Bitcoin. It helps you understand what kind of standard deviation movements that BTC has up and down. What kind of volatility does it have, right? So you could see back in March 2020, there was a huge, almost 200-300 vol event. We just call this, one of the more extreme vol events because it's really unprecedented. But Bitcoin has had numerous 100 to 200 vol events in its history. It is not uncommon for Bitcoin to have a 100 to 200 vol range event. Now, where is Bitcoin's volatility right now? It's sitting currently around the 40s. When it's sitting this low in terms of volatility, Bitcoin does not stay quiet for long. Bitcoin is a pretty volatile asset, meaning when it is being clamped down and there's a tightening of range in the asset, sooner or later, Bitcoin is going to make a pretty sizable move. And it's then going to follow this kind of 100 to 200 vol activity. So now the question is, on everybody's mind, will this high volatile movement lead to Bitcoin moving up or moving down? Now for this, you can't just look at price. You have to look at the surrounding factors of Bitcoin. What exactly has been permeating through the space thus far? Well, so far we very well know, like we discussed, that there's a whole lot of FUD or real news, whatever you want to call it, regarding China mining ban, a trader exodus or flight of capital out of China, and overall, Bitcoin being a reflexive asset that it is, meaning as price appreciates, more and more traders jump on board, more and more people feel more bullish about the asset, so they keep longing, and so the price goes up. Reflexivity also works the other way down, meaning as price grinds down, more and more people, start leaving the space or closing out their position, or simply just do not really tend to the market because they kind of see it as a lost cause, whatever. right? And again, this is probably short-term traders or those that just came in to the market late 2020, early 2021. But nonetheless, these are the people who typically have caused these kinds of outsized movements up here. But they'll also cause this kind of downside movement down here. But it's more so this kind of distribution and this sell-off, a lot of that actually has to do with bigger players selling too and taking profit. It just so happens to be that on the downside, it's the smaller fish, the retail, that get caught in the wind and they get completely washed out of the market, especially due to the fact that there are many exchanges that offer insane amounts of leverage. So leverage is a big part of the crypto ecosystem, and that creates these big washouts. So now what we have is a lack of momentum in the market, the reflexivity and the sentiment has turned down. A lot of people are bearish, but I also know that there's a lot of people who are still bullish, even while looking at the market structure like this. So I believe the next event that may be coming our way could be another potential downside move. Now with Bitcoin, I'm not really sure how far that downside move is going to go. I was thinking that at first 27,500, maybe a head fake towards 26, 25K, and hopefully reclaim back inside this yearly open. That might be your long position right there. That's one scenario. The other scenario is all this grinding and grinding, so much sell pressure, lack of bid in the market might just flush us down to 22K, 20K, or somewhere in this channel that we moved up through from April 2020 all the way into November 2020 before we broke out. And who knows, maybe we come back inside that channel, consolidate some more and gear up for the next big move by the end of this year. That's one way I'm looking at it. Okay. So what is the high time frame outlook? Well, we know that on the daily basis, again, lack of momentum, reflexivity to the downside, sentiment overall relatively negative, still bearish, right? But not bearish enough where people have completely given up hope, because that is the mark of true capitulation. The mark of true capitulation is high volume capitulating to a downside movement, and you spend a lot of time after that. Okay, you spend a lot of time after that building a nice base at the lows and then pushing up. Now, one can make the argument that, hey, well, what if this was the capitulation and this is a reaccumulation right here? It's entirely possible. Okay, I understand that from a nuanced perspective that this could be a reaccumulation, but it ain't a reaccumulation that I've ever seen. I'll tell you that much, because continuously grinding and hitting these lows without any meaningful higher low is not really how reaccumulation works. And this is definitely not a Wyckoff style reaccumulation. The most simplest way you can look at the market right now is something that almost all basic beginners do in a market, which is recognize trend in a market. So trend in a market is defined by, first, you have a low, you have a higher low, you have a high, you have a higher high, right? So the price traverses through this area like this, okay? But right now, what's happening in the market is you have a high, a low, a lower high, a lower low. This is clearly on a downtrend. And even within this contextual area, this is on a downtrend. And you can call this, oh, well, this is a falling wedge and we're accumulating here. Maybe, but you still have to break through key resistance levels. And then we can confirm that, okay, well, this was reaccumulation. And then from here, once we start breaking through key resistance levels, first one at least being 36, 37K, which is the first step. Next big level being around 40, 41K. That will probably mark, if we get above this level right here, that will definitely mark this being the lows, this being reaccumulation. And from here, we might head towards previous all-time highs and new highs. But you're probably thinking, well, why the hell do I have to wait for this thing to break out all the way up here and then I should go long? Well, that's how trading works in a market that is so clearly uncertain about its movement. You don't just want to gamble. If you want to gamble, you can go to Vegas. But if you want to make wise decisions based on statistical data, based on market structure, you have to know that there are certain things that the market gives you as information for free. It's literally that simple. Markets never lie. They're always telling the truth. In fact, markets are almost always right. It's just how you interpret that information and how you add clues together like a puzzle and what you make of those clues. Now, at present moment, I can say that there is a statistically higher chance that this market will continue to grind down. Now, does it break this level? I don't know. See, that's where I can tell myself that I don't know. Maybe it comes back into this area around 28, 29K, and then it bounces back up and then it takes off. Maybe. But this kind of grinding movement reminds me of this movement right here, right? Kept sitting at the lows multiple times, and then one day it just completely nukes, right? The other way, you can look at the market, same thing right here, back in 2018. By the way, if you go to my YouTube channel, you will know that I did YouTube videos from here all the way here, telling my Advantage members that we were likely headed to about somewhere around $2,500 to $3,000. I am on record on YouTube talking about this, while a majority of people in this area were talking about this being bullish and we were somehow going to rocket on up. Again, statistically, I knew that this is a very simple ping pong, not ping pong, a bouncy ball effect, right? We call it euthanasia's roller coaster, bouncy ball effect, whatever you want to call it. And the premise is simply like this. When you drop a bouncy ball from this height, it bounces to a certain floor in the market, right? Oops, that's a bad drawn line. Okay, it drops to a floor on the market. Then the bouncy ball bounces up. It creates a lower high, comes back to the floor again, bounces up, lower high again, until it fizzles out. Now, the thing about this floor is, imagine this bouncy ball weighing on this floor, which is a relatively weak glass floor, let's just say. So every time it hit this floor, it kind of made cracks first time, more cracks the second time, more cracks right here. And now it's just sitting on those cracks. And eventually those cracks are going to break and the floor is going to give in. And then you have a washout like this, which is exactly what happened back here. And I'm now getting similar signs, not only of market structure, but of the same kind of sentiment of the market where people in this area were so confident in their ability that this market has to go up, that they are going to hang on to losing positions or lever up long in here or hang on to their altcoins. It's the same thing that happened in 2018. Now, markets never repeat themselves exactly, but they sure as hell do rhyme. And the reason they rhyme is because human nature is so easily identifiable and repeatable, right? There's a pattern to it. The psychology behind trading, the psychology behind investing, there's hundreds of years of data that tells you that humans will react in the same way, 9 times out of 10 in a market. Now, this time around, I'm thinking the same thing, right? Statistically, again, the chances are higher that this thing breaks through. If it breaks through, or even if it comes back to this low right here, alts are going to go down further. Maybe another 10%, 20, 30, 40%. BTC might even be sitting at these lows and alts will still go down, which is, by the way, where a majority of people still have their money parked. Okay, so if BTC comes to this level, the odds are your alts will get washed down further. If it breaks this level, then alts are completely dead in the water for the next few months, right? So we talk about BTC heading down potentially, right? We talk about the nuances in the market, okay? Now, levels to watch. Again, I mentioned 27,500 is the next big level. I don't really know if that's going to hold, but I am personally thinking that the next big level, if we bounce anywhere, is somewhere in this mini consolidation period. I don't even know if it bounces here, but I would figure like maybe we just roll over, create a head fake, trap a bunch of shorts here, come back up above this yearly open, and then start our next bull run, maybe somewhere around August or September. That would be an ideal situation. Because what's happened here so far is every time we've bounced in the market, what we've really done is we've trapped a bunch of shorts down here, and you squeeze them out, squeeze them out, squeeze them out, but the market still rotates down. That means there's a short squeeze happening in the market, but no real marginal buyer. Meaning no one is coming into the market and saying, hey, well, I find Bitcoin cheap, I find Ethereum cheap, let me just keep driving this thing up. See, that's not happening. What you really have is just temporary pushes in the market just to squeeze out some liquidity, but still creating, just lower highs after lower highs. So that's not good in a market. So levels to watch, like I said, 27K and maybe down to here about 24 to 23K. Now, of course, we can always head lower around, what's it called, like 19, 18K, or we can fall inside this channel, right? This is something that I don't think many people are watching. This is where we consolidated for like 5 to 6 months before we broke out. Who knows? Maybe we come back into that area. That might be, say, over the next few days, between 22K down to about 17K, depending on where we land in this channel right here. If we do, that is. Okay. Now, I posted a chart about a negative 85% decline. It was just me trolling, but sometimes trolling has a bit of truth to it, right? I was just joking about it, but then I thought to myself, well, Bitcoin does have pretty outsized, declines in its history, right? Every time it has gone up from the previous bottom of the bull cycle till now, it has insane declines. So for example, from 2014 and 15, this low around $163, Bitcoin went up to about 20,000. It had almost an 85% decline all the way to about 3,000. This time around, we're going to measure the cycle low from that March low, which is around 3,900 to about 64,000. Well, if we mark that same decline of about 85%, where does that take us to? About 13,000. That's huge. Even a 75% decline could take us to about 19,000. All right, so that's pretty massive movement. Now, again, I'm not saying we have to do it the same way and we have to have a 75 or 85% decline, but Bitcoin is very reflexive in that nature where when people get bearish and when people start selling, there's just a complete washout of the market. And sometimes those washouts are very, very epic and they come with a lot of pain. And that pain, I still don't think is visible in the market. I think there's still a lot of bullish euphoria in the market. Everybody thinks you can make easy money, or from here, we're going to hit, I don't know, 60K, 80K, 100K all-time highs in a few months. I think that's probably a dangerous form of thinking because majority of people, if you see another 10, 20, 30% decline from here, they will definitely get washed out of the market. I think maybe that's all it takes. It's just another quick washout. All right. So we covered levels to watch, comparison to 2018-19, we covered that. On-chain metrics for BTC. Now this is not something that I am an expert in, so I follow other smart people who do this kind of information. So Charles Edwards, you can follow him on Twitter, Capriol Capital, right? This guy has been talking about the daily active addresses being halved in BTC. Now, of course, part of this has to do with the idea that there was a lot of people who probably, I don't know, have stopped using BTC to move funds, maybe because of the whole China mining ban, maybe because of exchanges in Huobi and OKX. I don't know, maybe those addresses are not active anymore. I'm not quite sure. But the point is that the number of active addresses, which is one of the bullish metrics that has typically marked tops and shows, downside momentum happening, okay? These active addresses have a good ability to recognize when a market is clearly in an uptrend and when a market is in a downtrend. Any person can look at this and say, wait a second, the market clearly seems like it's in a downtrend as per the daily active addresses, right? So that's pretty obvious. Now, the other one is the whales that dumped on the market top, those with 1,000 BTC, are still not buying. Now, this is another somewhat convincing metric. Now, if you actually go to Willy Woo's page on Twitter, he actually read this in a completely different way. I think Willy Woo is almost always pretty bullish. I don't see him ever being relatively bearish on the market as per on-chain metrics. So sometimes I think, I don't know, maybe are on-chain metrics a meme? Are they something that should be taken with a grain of salt? I'm not quite sure. All right, but the point is that this kind of data is pretty clear. Again, something that we often follow in markets is, when are the whales buying versus selling? So as you can see, this comment says the whales that dumped on the market top, okay, right here, all right, are still not buying. Meaning when you start to see this yellow line start to tick up, that means you know that, okay, someone is accumulating. Just like we marked the bottom right here in 2018 and 2019. That marked the bottom, and then we continued our way on up, right? Again, over here, okay, whales kept distributing, or I'm sorry, whales kept accumulating right here, and then they kept distributing on the way down. So these different metrics tend to give you a better, more fuller picture of what's happening in the market. And so far, the picture is pretty grim. Now, what about what's happening on the Ethereum and DeFi front? Now, I'm sure if you've been around in the crypto space for a little while, you know that narratives come and go in crypto. Whether it's a DeFi narrative, whether it's EIP 1559, which is coming up in August, whether it's super cycle, NFTs, etc. I think a lot of those narratives have played out, or by now they are somewhat of a, I don't know, a meme in the market, right? Super cycle, in my opinion, was always kind of a joke, but people clearly took it way too seriously and thought that, well, Ethereum went from 2,000 to 4,000. Well, it has to go from 4,000 to 10,000, right? Like, I think most people don't recognize that a market cannot just 2x and 3x multiple times over and over. After a while, it's going to get its move exhausted, and it's going to have people selling, people taking profit. That's the wise thing to do, especially if you're a big fund or an institution. And I can guarantee you that in this area up here and on the way down, I'm almost confident that institutions sold some of this, and hedge funds did as well. And institutions and hedge funds have been selling through this area. I'm almost confident that they've been doing that, because you don't have this kind of pattern developing after a move from 90 bucks to 4,000. And then you tell your investors, well, I didn't take any profit, right? And then prices come down to 800. And then you tell your investors, well, shit, I didn't sell any at 4,000, but maybe we should start selling at 800. You'd kind of be a terrible money manager if you're doing that, right? So the point is that if you're somewhat of a reputable firm, an institution, or a hedge fund, more than likely you sold all the way through this, and you're probably still selling, right? So Ethereum, for the most part, this EIP 1559, to me, I really don't think it's going to have a huge impact on the market. I think if anything, one can make the argument that it already played out from here to here, or from this area, or from this area all the way when we reached 4,000, right? Everybody knew that event was on the radar. Now, as we get into July and August, where the event is coming near, it's kind of like, selling the news, right? And once again, Ethereum is showing the same kind of bouncy ball effect. Drop, lower high, maybe another lower high, and then maybe we nuke. Now for Ethereum, here are some of my levels that I'm watching. Okay, so first of all, we're barely sitting and hanging on by a thread around this 1950 zone. 1950 down to about $1,700 and some change, right? It's a pretty strong looking support structure. So losing this is really not going to be good. Losing this will almost immediately force me to look at previous all-time high, which is around $1,400 easily. Beyond that, then there's this weekly SR around 2018, which is around $800 to $700, right? Resistance, support, resistance. So that's around 800 bucks. Do we make it there? Maybe, I don't know, but it's a level I would look at if we lose 1400. Now, what about DeFi, right? Again, DeFi was supposed to be the thing that was going to sort of change crypto forever. And, we were supposed to be really bullish on it. Well, what about DeFi? Well, I think DeFi, for the most part, we already know is taking a pretty sizable hit in the market, right? Even good assets like SNX, they had been basically distributing since the middle of February up here. From a high of $30, SNX is still down 62%. Say Aave, again, another good asset, right? Aave has a lot going for it. From this high right here, Aave is still down about 58, 60%. Compound, okay, from this high up here, Compound is down about 55%. All right, Solana, what's Solana down? From the highs to here, it's down about 48%. So the point is that DeFi as a whole has taken a hit. And as we continue to grind down lower and lower, all right, there will be days and pops in the market where you'll feel like, oh, well, maybe this is the day that the market ends its bear trend, right? And you'll feel like jumping into the market. But overall, what we have been doing in the advantage side is we've basically been sitting cash almost since end of May, maybe beginning of June. And from there, we've only been playing a majority of the positions to the short side. We've taken a few level-to-level plays of scalps on the long side here and there, but nothing in big size and nothing, particularly like we're aiming for the next bull run. We're just taking it from level to level. Because what happens is, let's just say even today, for example, right? If you look at the hourly candles right here, and you can see after Solana put in this low, now we're getting a nice squeeze up from the market. And this may get people excited and say, oh, well, maybe Solana has hit the low. Who knows? Maybe from here I should go long, and this might take me for the new bull cycle, right? I think that's really what happens when you see a nice big green candle. But what I would say is think in a different way where you can ask yourself, well, what if I see big green candles like this, and I know that overall the trend is down, and I short these green candles, right? Now, of course, you don't have to short with heavy size at the exact tip top, because for all we know, it could head on up further and then roll over. So you have to be prepared for situations like that. And so what I've been doing is really taking smaller size short positions in the market. And that's it, right? Just been staying in cash, taking shorts, really trying to do my best to stay away from longs. And if I do take longs, again, quick scalps, level to level, less than 24 to 48 hours, and that's it. Okay. So we know for the most part that majority of ETH products, even Ethereum itself and DeFi, are really in a pretty grim looking market. And even fundamental catalyst events, they're not really making a whole lot of impact on the markets, right? Ethereum levels to watch, we already covered. We have this 17 to 1900 pocket, which we found strong support on. Okay, so far right here, but if that breaks, then we have 1400, which is previous all-time high, and then $800. Okay. DeFi shorts we spoke about, right? Again, I think it's all the same trade. Whether you want to short Band or Link or Luna, I think it's all the same trade. If you want to go short on altcoins, I think they're all pretty much the same. But don't short, strength like Axie. Like that's one thing I'd say. When you see Axie kind of being on a tear like this, you don't need to be a hero and try to short it. Right? Just let the thing go. If you could take long scalps in here, you can do that. But other than that, just don't worry about trying to short assets right at the tippy top. You can look for assets that are already looking weak. Like Rune clearly looks like crap. FTT looks okay, doesn't look terrible, but still on a decline. Matic looks pretty darn bad too, right? Luna, relatively bad. Sushi, still bad. So point is, majority of these assets, in my opinion, can be shorted. And I actually talk about on my Twitter feed what I see as targets for the near term for some of these assets. For example, BTC, I already spoke about the 27.5K level, Ethereum near term 1500, Luna $5, Sushi $5, Matic 75 cents, AVAX, all this stuff, right? These are some near term levels. Of course, price can blow through those levels easily, but these are like the near term supports that I'm hoping price gets to and maybe bounces. Okay, I don't know if it's actually going to bounce from here or just nuke right through. So just something to keep in mind. So we talked about what our community's been doing, what our game plan is for the next few months. What our game plan for the next few months is just being patient, all right? Really playing from the cash position. Again, not financial advice. I do not tell my community what to do. They are free to do everything on their own. I simply provide analysis, context, and what I'm doing in the market, okay? And this is, of course, evident by the challenge that we started by this $5,000 account, right? Started at the beginning of the year with 5,000, had all our ups and downs, went to 15, 18, 8, 9, all through the months. You can kind of see our videos in here. And then currently we're sitting at 15,100. Okay. Well, in a simple way, you got to ask yourself, how are you doing relative to BTC? Well, where is BTC from January 1st? Well, here's January 1st, right there. Yearly open. Okay. BTC is currently sitting at 13% from the beginning of the year. So if I had bought BTC and I'd held on till now, I would have 13% on my overall portfolio. Currently, our account sits at 15,100. That's a good, 200-300% from where we started. So we're obviously beating BTC, right? So the point is, you have to recognize, when to be a trader in the market, when to play from a cash position, when to be short, when to be long, or when to just really not do anything. And so far, I found it pretty beneficial to just kind of be in a cash position, sitting, in my shorts, and then that's pretty much it. Okay. The last thing I'll show y'all, which I think could be perceived as bullish, is this falling wedge that may be developing. All right. I think people are looking at this and thinking, well, this is a falling wedge, and of course, this has to be bullish. Like from here, we have to break out. Maybe, but we really don't have to do anything, right? We've had numerous, W bottoms like right here, where we should have broken out from here, right? We've had, maybe even you can call this a head and shoulders, inverse head and shoulders, which we should have broken out, but again, we completely nuked. So multiple times the market has shown you that bullish patterns may come and go, but the market continues to maintain its downtrending structure. So you have to just assume that for now, the market just continues to grind down. Okay, that's really all you can do. All right, so anyway, I hope you guys found this information helpful. I hope you now know where my mindset is. Again, you can go to thealphatrades.com, hit the products page, join our membership. Come hang out with us and see how we analyze the markets, see how we have created this challenge and shown our Advantage members exactly how I'm trading the market, exactly what we do on a day-to-day basis in our Discord channels, right? All this stuff is visible to you as Advantage members on a day-to-day basis. Again, we do 2 videos a day for our Advantage members. All right. I hope y'all join. Until then, take care. Hit the thumbs up on the YouTube video if you like our content. Until then, cheers.